The new tax filing season is here. January 29th, the Internal Revenue Service will begin live filings if it doesn't start a few days before then. But this is usually a time where people who are married may make decisions that can impact how much of a return that they get. What I'm talking about is the folks who file married filing separately because they have a spouse that has some type of financial obligation that impacts their return getting to them because of an offset, whether it's for child support or whether it's for a student loan or other financial obligations through the state or whatever that causes the return to be intercepted for financial offset. Well, rather than to file married filing separately, which is the worst filing status, by the way, because you get none of the credits that you would otherwise be entitled to, you should opt to file an injured spouse claim. So you should file married filing jointly, but file an injured spouse claim. What that will do is it will alert the Internal Revenue Service that, hey, I, the spouse, probably even the larger income earner, sometimes not, but they will look at the return and they will separate out the amount of money that the spouse that actually has the obligation made opposed to how much the injured spouse made, and they will only intercept a portion of the return that would have come to that spouse that owes the money if they had filed a return on their own. So basically, it accomplished the same goal, except that you still get all of your credits for married filing joint, your child tax credits, your earned income credits. You get all of those credits that you would otherwise be entitled to, rather than file a separate return if you're married. A lot of folks are not doing that because their tax preparers are not telling them. This year, in order to maximize your refund, talk to your tax preparer about filing an injured spouse claim along with your tax return. Now, when you file documents that like that, it may take a little longer for your return to come back, but at least you will get the full benefit of your tax return. I have a tax client now, a situation where filing separately, her federal refund would have been $400 and her state return would have been $57. However, by filing an injured spouse claim, her actual return from the Internal Revenue Service, her federal return will be a little over $3,000, and her state return will be a little over $600. So it makes a huge difference. Your entire return will not be captured if you're entitled to monies outside of what your other spouse owes money has. Because remember, it is their obligation, not yours. A child support obligation to your spouse is your spouse's obligation, and it's not your obligation. You are not ordered to pay it, nor can they make you pay it. A student loan debt is one that your spouse signed for, not you. So they cannot intercept or take your earned income for the debt that's owed by a spouse, even though you're married, because some debts are separate, even though you're married. So make sure that your tax preparer or your CPA or whatever will file that injured spouse claim. I can't imagine that a CPA or EA or a tax attorney that's doing a person's taxes would not give them that benefit or would not give them that tax advice. But for those of you that do it on your own, or you go to H&R Block or some of these other places that kind of process taxes as people are going like cattle through a cattle farm, and they're not really looking at what's the best benefit for you. They're only looking at what you're telling them. Have them to examine your return and do a good, competent job so you get the maximum refund possible. Don't leave money on the table for Uncle Sugar.